Hi guys, want to say Merry Christmas to all of you and your family. Hope you guys had a great year and looking forward to another great year next year. My name is Mitch King. I'm with Trade Stocks America, and here's the daily stock report. This is for December 27th on Monday, 2010. Here's the Dow 30, still powering up real steadily, moving up, as well as the other indexes. Here's the NASDAQ Composite, not much change, slightly negative today, not important. S&P 500, also on a nice steady uptrend, as well as the Russell 2000. My hunch is that the market's setting up to have a correction in January, probably that first week to 2 weeks. We should consider reducing long positions this next week before the new year comes. There's several reasons I'm concerned is that the market has been going up very steadily. We have some window dressing going by the mutual funds. They tend to rebalance and reallocate their money in different stocks. They hold stocks long that are winners to try to boost up their performance numbers for year end, and which is what their bonus is based off of. So there's a lot of reasons why we should probably step aside or reduce long positions in anticipation of selling pressure. I also want to show you this volatility index. We have a low today of 1540 yesterday and today, which we're right over here. We saw that here in April, and the last time we saw that before goes back into May of 2007. So that's 3.5 years ago we've seen this low volatility index. When the VIX gets low, look out below. That's the saying that the market indexes might want to come down, and I think there's a lot of reasons why there might be a short-term correction. We should start reducing those long positions. That's what we've got in the report here in red text, yellow highlighted. So be a little more cautious, start capturing some of your profits, especially you guys who have stock options might want to reduce those positions because they change the most. Here's AZO, one of the big winners in the last few months from that 208 number in late August, I believe it was. And here we're at 271, 272. This has been a real steady performer, done very well with when the market's gone down. I'm just giving you our reviewing in our stock list. This is the oldest one, got the most profits. Let's take a look at CMG, Netflix, and SanDisk. CMG sold off here in this whole month from that high of 262 on December 1st. And here we have dropped 31 points. Looks like about over 12, 13%. But this has been one hot stock you've been wanting, that hasn't paid to be on the sideline. This may not be the first choice to reduce that long, but it should have some pretty good support around this $225 figure. Let's take a look at a couple other long stocks that have done very well. Here's Netflix, also been a real strong stock this whole year. You can see back in February, this stock was around $60. Here we're at $184, so it's tripled this year. Here's SanDisk on a 10-month chart. It's really only made its big move in the last 5 weeks. This one would be one I would consider reducing that long. Apple would be another candidate. We don't have any profit on this very much. 306.60, and here we're at 323, so maybe $18 on a $300 stock that's only 6%, it looks like. So this one would be might consider reducing this long position. Enjoy Global, nice steady uptrend here. Agco has started to move up here, similar to Joy Global. Finally started moving the last few days. AGU up 2.4%. It might get a top right in here, might get stuck in that $87 figure, moves above 87, real good news for AGU. The companion stocks of this sector, agricultural chemicals, have also done very well. Mosaic, Monsanto, Potash is starting to move up in the last week. IPI, good in the last couple weeks. Oil has resumed its steady uptrend as oil's moved up over 90 per barrel. Broadcom's a dog. I think we ought to consider selling this one. CTXS kind of consolidating here. I think it's lost its luster here on CTXS. And when we saw this big drop, this oftentimes happens to kind of break a stock down from its momentum type of stock where people are really excited about it. And now it's just kind of ho-hum. Needs to catch on fire, but you might look at this one to sell. I'm trying to find some long positions for you to consider selling. Cake's been a disappointment here in the last 2 weeks. Hasn't moved up here. It did originally that first 4 days, and then the last 4 or 5 days, given up all that profit. Not much profit was in it, but so here's another one. I like to sell those weak ones and hang on to those good long ones. AEM has fizzled out the last few days, started to move up here. Haven't give up total hope in this one. Looking for Visa to look somewhat like Magellan chart. Let me show you that. They're not in the same sector. I'm just showing this to you as what we like to see Visa, and which I think is very, very probable to see Visa look like this in a couple weeks down the road from now. MasterCard's fizzled out the last 3 days. Bull short ADES is still trying to sell off here. We need to see this down below that 9.25 figure. Get down below 9 and start accelerating on the downside. But these bull shorts haven't acted too well. Let's cover a new one that's on our radar. XOMA says that they're going to release some phase 2 studies on a once-a-month diabetes drug. This could be a monster blockbuster drug because they're the only ones that have this once-a-month dosage compared to a daily pill like maybe Oronase or something like that. I haven't studied to see if this is really a type 2 diabetes for the more severe cases, but this is really big news. Pfizer looks like Pfizer is the marketing partner with this. So this gets over $9 on Monday. I think this is going to be an excellent bull short. And the day traders, we should be able to do very well on this in the trading room on Monday. You guys have a great Christmas. We'll talk to you on Monday night. Oh, one more thing. Don't get leveraged on XOMA here.